Is Sterling Infrastructure Incorporated a good company to buy? Let's find out. I'm gonna use the tool Financial Panda to check it out. So first off, the Sterling Infrastructure is an engineering and construction company that might be a turnaround or a fast grower, I assume. Let's read the last 10Q report. Of course, we won't read it by ourselves. We'll make Panda to read it for us. So Sterling operates in three segments: e-infrastructure solutions, transportation solutions, and building solutions. E-infrastructure focuses on large-scale site development for manufacturing, data centers, e-commerce, warehousing, and power generation. Also, there are other things the company is doing, but the main thing I want to focus on is this e-infrastructure solution that is a new thing for the company, and this might be a turnaround or a fast grower opportunity, as this company is building distribution centers and warehouses. The company operates primarily across the southern, northeastern, mid-Atlantic, and Rocky Mountain regions and the Pacific Islands. What are the goals? The company focuses on growth in the infrastructure solutions segment, shifting transportation solutions towards alternative delivery and design-build projects, growing market share and presence. Lately, the company acquired Professional Plumbers Group. There is the repurchase program of the company common stock. Worth noting is the fact the share repurchase program was not that big. Actually, it was quite small, which is pretty strange. We'll check on it later. Regarding the numbers, we'll cover it later. Let's now see what are the management comments on the results. The increases were driven by higher volume, improved project margin, and the inclusion of Texas plumbing business. The decrease in infrastructure solution was primarily driven by the timing of advanced manufacturing projects, lower volume, and other small projects and delays, partly offset by higher volume from data centers. How the company is using the debt? It includes term loan facility, revolving credit facility. The company hasn't diluted shares in the past 3 years and has no plan to do so. The report is positive, but keep in mind this is the for the period on September 30, 2024. Let's dive into the financials. This report was generated on May 1st on 2025. The industry is growing at a pace of 10% in the last month, while this particular company is growing monthly 30%. The IPO year is 2005. It's quite old company because it was founded 1955, which has only market cap of almost $5 billion. Let's see the insider transactions. There were a couple of sales, but I don't really care about them because they were done at the end of the year. Yeah, of course we should dive more into it, but worth noting is one sell from the General Counsel and one big buy from CEO. Buys from the CEOs are not that much important though. As we can see, it's quite greenish, big free float. It's not a leader. It doesn't have low institutional ownership. It's a bit undervalued in terms of the industry average, which is PE 18 versus 23. And if we think about this company as a fast grower, then this PEG is very good. And here is what I like about this company. It's all greenish here. So this is surviveness, which is very good. And the growth, which is also incredible. let's dive into the details of the financial. It has $600 million cash, which net after deducing the debt gives $10 per share, which is 6.4%. Debt to equity is only 30%, and the total equity of the company is $800 million, while the company is valued at 5. Price to free cash flow is 10. As we can see, there is the buyback program. The company doesn't have dividends. And let's see about the growth speed. So the company from the 2022 is growing 25, 10 and 7% of the revenue while increasing the expenses accordingly. But what is important is the earnings, and especially the pre-tax income. As we can see, it's growing really fast, and it's growing even faster. In 2023 it was 30%, now it's 90% year to year. And what we can see is it comes from the operating income. The company is decreasing the debt, increasing cash position. The free cash flow is also growing, so there is no like creative accountancy. There is no inventory. I should check on it later. Maybe this is just a small bug. What are the margins? The company operates currently on 20% margin, which is huge. Previously it was pretty low, 3, 4, 5, 7 and 12. This is growing its equity pretty fast. The average price to earnings, yeah, this is the only one, the only thing that I don't love that much about this company is like historically this price to earning is almost twice as high as 5 years ago, but I think this company may not be just a stalwart, it may be a turnaround transforming into a fast grower. So I think this price to earning might be just fine, and it might be actually pretty low if we think about this growth like 50% per year, which I don't I have no idea if this company can keep the pace at this level, because even the software companies don't do that. This is just probably a bit of a guessing game. Last one thing I wanna do is to use this drastically useful predictive answer. So here is the prompt that we are gonna paste into the chat GPT and ask what it thinks about. This is just basically the pretty much a lot of questions that I may have for the company that I should Google up, but I'm not gonna do it manually. I'm gonna just ask the ChatGPT to do it for me. So first off, how the company makes money, we already covered that. What are the competitions? Heijmans, Mortenson, Gilbane, Primory Services, and probably a lot of other companies, because this company is pretty small. As we can see, it was not a leader. It was not even at the top 10 of companies. We can see here the engineering and construction, Sterling is at position of 14. But the thing is Sterling infrastructure transforms into building the warehouses. So it's pretty hard to compare all of these companies, because they do build stuff, but all of them build different things. So this is not super comparable. I would have to compare it to similar solutions like PTSG probably. Okay, let's see about the answers. So regarding the unique selling points, strong presence in high growth US regions, focus on large scale, high margin projects. Management, Joseph Cutillo, joined in 2015. His payroll is total compensation is $6 million. CFO earns $2 million. General counsel earns $1 million. So what I like is there are not that much of a difference in payments, so this is fine. Who are the customers? Government agencies, Fortune 100 companies, top national builders. Price history. In 2015, the stock traded around 3. Now the stock price is 165. Let's see. Yeah, this company already made it like $15 from 2015. When is the next earnings report? It's not visible here. The last report was on February 26. There is no market share data to see how much of the market the company has. There is no negative press, which is pretty good. Were there any salary increases? Median employee in 2023 was $800. No salary increases mentioned. How many? Only 2 analysts cover the company. This is like super strange. I have to check it. I don't know if it's gonna be on the Finviz. Probably not. Probably not. Maybe this is just a bug from the ChatGPT, or maybe this is true. I would have to check it. There is an upside of 50% and a strong buy. What are the latest news? CEO transformed Sterling to a diversified infrastructure services provider. There is 20% of margin on infrastructure growth. Has the company beaten the earnings? In 2024 August, the company reported 30% increase in earnings per share. There is no volume stats. Yeah, you can check it manually. Financial estimates. This is quite old for the 2024. So basically, I do love this company. I'm just not sure about the price, if it's fine. And that would be it for now. So anyway, if you want to try this tool, Financial Panda, I recommend using it. There is a 2 weeks free trial. So happy investing. Cheers, guys.